Hi everyone, Victor Doko, financial planner at TF Services. Hi everyone, Victor Doko, financial planner at TF Services. Just doing an educational video so people understand what financial planners do and also explain how I've helped a client before now. So feel free to let me know if any questions, comments, and we'll be sure to answer them. So just sharing my screen. Okay, perfect. So this is one of the recent clients we have helped, and I'll give a quick rundown of the client situation and explain what we did as well. So client was online. So I've actually never seen these clients before in terms of face-to-face, but we've had Zoom meetings and we're able to go through their situation and how we can help. So couple, 32 years old, 36 years old, one dependent, actually one more on the way as well. Income about 83K, 104K, and projected rental income of 44,000. Expenses are there as well. The client just has an investment property. They are lucky to be living in a property that they don't have to pay for, so that's great. Savings of 50K, shares of 50K, liability on the investment property of that amount is an investment apartment, not a house. Generally, I love houses better than apartments. But moving on, super is about $44,000 for client one and $85,000 for client two. So a little bit low on that super side, superannuation account. So when they came, what they wanted to do was one, start saving for the kids' future. And we discussed a few things in regards to that as well. So I think they wanted to live a good life, be able to travel every year, but also send the kid to a private school and plan for the second kid as well. So we put in a structure in place to help them achieve that. They also wanted to ensure they have the right protection in place. So, protection is very important, and I'll talk a little bit more about this further down below. But basically, that's just ensuring if one or both of them couldn't work, life still goes on and they can still hit your goals. If they can't work for a long time, they also still just wanted to ensure that that doesn't sideline anything. Obviously, life wouldn't be the same, but they can still be in a situation to have a decent standard of living. So we'll talk about that. And last one was they just wanted to review your superannuation accounts. Super is a very complex structure in Australia. So people don't really understand it, but we help people, choose the right investments that they can have within super, and also just ensure that their super is working in line with your risk profile. Everyone has a different risk profile. With some education, people are able to take a little bit of risk, but it's key to really understand what your risk profile is and how that can be used to your benefit. Generally, I always say younger clients, that's the best time to take some risk, but obviously every situation is different. But if you think about it, you get closer to retirement every day or closer to, exhausting your human capital. So you really want whatever financial capital you have to work as good and as hard as it can for you. So we talked about that as well, did some basic projections for that. Just a few unidentified needs. When clients come to see me, we sit down, we discuss what they want. I also tell them what else we can help with and how that actually improves their situation. So we talked about diversifying their investment. Obviously, they're very concentrated with the investment property. That's an asset worth a few $100,000, and there's nothing complementing that. I don't mind if clients have property, but what we always want to do is build, a diversified investment alongside that property. And that will take a while. So you really need to start early and just keep going at it. So debt management was another one. So in terms of, okay, what interest rates are you paying? Can you do better? What's the structure around that as well? Have you considered other structures that can help? And another key one where lots of people don't think about, and I think this is very, very important. We don't usually help with this. We refer to an estate lawyer to help with this, but it's making sure you have on paper who gets your assets. You don't want the government deciding that for you. You don't want to be left in a situation where it's not properly documented. And especially in a couple situation, you really want to know who gets what. And I guess another key aspect, and to me, anyone above 18 years old, you should have a power of attorney because who will make decisions for you if you cannot make decisions for yourself. You do not want to hand that power or ability to someone who you do not trust. So it's very important to have a power of attorney in place as well. So those are the unidentified things we speak to the clients about and say, well, look, we can connect you with the people or we can help you with those. And if you want to do it, yes, let's do that. Okay, so moving into the solutions now. So in terms of superannuation account, what we found with younger clients is, look, if we were able to diversify your portfolio a lot better and move it into a fund that is cheaper than what you're currently paying, it actually adds lots of benefits in the long term. So just looking at this client, there wasn't any magic done, and this is just basically the change in risk profile and the change in the amount of fees that you're paying. And you can see that's close to about $310,000 difference that they can have in the future. To me, that's a no-brainer when you're talking to young clients, people in their 30s or 20s, and helping them restructure their superannuation accounts. And that was for client one. So client two obviously had a bigger increase, going back to what I was saying, the different risk profiles, and people are comfortable with different levels of risk. The main thing, look, we always want to be diversified because we're not 100% sure of a certain investment that will do the best over time. And if you're diversified, you have a better outcome long term. So with this client, it's a $500,000 difference straight away. So, and this is something people push back, or rather people kick the can down the road or lots of time. They're like, I'll do it next year, I'll do it next year. And before you know it, it's 10 years down the track and you've probably lost a huge amount of funds in there. So at least we're able to do this in the client's late 30s or at the mid 30s, and you can see that's a $500,000 benefit. So now this is another interesting one that I love setting up for clients, and I think it just makes lots of sense for young people as well. So it's very similar to mini trust. It's called an investment growth bond, and look, really depending on your situation and what you want to achieve in the future, the different ways to structure this. But this is an investment which you set up, you put some money away consistently, and then after a certain period of time, that investment is not added to your tax return after 10 years. So it really works wonders if you put in a small amount away consistently in this type of investment for the long term. The beauty of it is they're doing this for the kids right now, but down the line, say 10 years down the line or 15 years down the line, they might want to use it for themselves. That's fine as well. Or they might still give it to the kids. And this is very effective from an estate planning perspective, because when you want to transfer this to the kid, you will not pay any capital gains, and you can effectively transfer that to the kid. Or obviously, depending on when you think the kid can have it and when you think it is a suitable time for kids to have such a large amount of investment. And that works well because, for example, let's assume the clients decide to retire early, and if they retire in about 20 years time, they still don't have access to the super. So what they can do is use some of these funds in the interim to actually help them before they can actually get money from the super. So I think it works quite effectively in that regard as well. So I love setting this up. I think it works wonders for people who can afford it, and also for people who are in the right life stage. Okay, so other thing we looked at about, and this is where we talk about protecting human capital. For young people, you're going to be working for this clients, you're going to be working for the next 30 years or 20 years. So lots of that working time is actually for you to get money. And that right now is human capital, your ability to get money. And if you cannot work, you've lost all that human capital. So what we want to do is protect that. And the key way to protect that is using something called income protection, where you're passing that risk to a company, saying, look, company, if I cannot work, I actually want to be paid at least 70% of my income. And the company is saying, yes, we'll do that for you, but we need to charge you a premium for that. We need to charge you a cost. And in Australia, you can take that money from your super. And to me, that's another no-brainer, because if you can't work in your 20s or 30s, your super will still be used because you need to access that. You then run out of funds. So why not use the money you don't have access to And when I say access to use, now you can use it as a form of paying your income protection. And that actually safeguards your human capital until you finally retire. And the beauty about the income protection as well is, there's certain features we can choose to ensure that money is still added to your super while you cannot work. So uh, it's quite a, interesting aspect that I think lots of people do not realize the risk you're taking, because, you protect your car, you protect your house, but you don't actually protect the one thing that can give you all those other physical assets or more. And lots of other benefits with income protection as well. So, for example, you can use it. Yes, you can't work for 3 months. You can use it for that period, and then it still keeps going. The younger you get it, the better as well, because as we get older, we have a few health issues, and with more health issues, you can actually be in a position where you pay more, or you might not even get this cover. So it's very advisable to look at this early. And then you have your trauma protection. So basically, trauma talks about covering you for cancer, stroke, and you get a lump sum. Total and permanent disability is a lump sum as well, and life insurance is a lump sum that goes to your beneficiary if you pass away. So it's very important to have that, especially as a couple, because can the couple take care of the mortgage? They have a kid. What happens to, their living standards, and would the kid get the life which you've actually planned for them? So I'll definitely do other videos in terms of explaining that in more detail. Other intangible benefits, I think with financial planning, you definitely get financial satisfaction. One of the things we discussed with the clients is, okay, yes, you might not be able to provide the private school fees for 2 kids. However, if we can build that wealth to a certain extent, you can definitely still meet the holidays and maybe go to a lower end private school, But now the clients know that for sure. There's no arming and ahhing and seeing if they can do other things to get to that goal. Obviously, they can, because you can potentially get a better job or increase your form of earnings, and that can help. But at least at this point in time, it's just good to work within your means. And financial education. So, just think about these clients. They didn't know about lots of things before they came to see me, but now they understand different asset classes. They understand different investment structures. They feel a lot protected. I remember when I was done, they're like, "Oh, look, they hadn't thought about this, but you're very happy to have actually gotten that covered now. At least now they can rest. They can worry less, because they do, now know that they have a solid protection in place." And cash flow structure. So one of the things we've been doing as well is just helping them set up a cash flow structure. One of the things with cash flow is it's the foundation of building wealth. So if you get that right, wealth building is a lot easier. So if they don't have a good cash flow structure, because one finds things about things differently from the spouse, it's not a good situation. So we come in and help with some objective reasoning and some objective structure in place, and guide them within that process as well. And another intangible as well, I was able to clarify to them what I do, what they should look at others to do, and what they should be aware of. For example, an accountant will help you with tax returns. They can definitely help you with some tax saving strategies. A mortgage broker would help you set up your loans property, help you with the structure that you need to have in place as well. Obviously, the financial planner, we help with your super, wealth protection, wealth creation, and wealth management in general. We would help you with your cash flow. And obviously, the estate lawyer helps you with your will, power of attorney, or anything legal. I always tell clients that don't mix that up. Your financial planner should not be giving you mortgage broking advice, except you're a mortgage broker. Some people do that, but there's a clear difference. So if there's any conflict, you should always listen to the actual professional in that regard. And estate lawyer should not be telling you how to invest. Yes, they might have done investments that work well for them and they've been able to build wealth. It doesn't mean they know the best ways to build wealth for clients. And I guess one of the good things about advising couples with kids is look, now they're on the same page with investment. Now they're on the same page with cash flow. It's a lot easier to help them build things and get to their goals in that regard. So that's just a classic example of how we help clients. So if you have any questions, comments, please put that in the chat. We'll be sure to get back to you. And Victor, financial planner at CFA Services, we are on Instagram, we are on TikTok, and obviously on YouTube as well. So please follow us and share this with anyone who you think will benefit from that as well. And if you're looking for ways to reach out, please jump on our website. There's an easy way to get in contact with us there, or you can just direct message me.